Hi, this is Perry Shackelford from Remax Action. With my favorite mortgage lender, Tom Howell from Marathon Mortgage Services. He's the president, and he's been working with me for a number of years and keeping my clients very happy. Tom, how are you tonight?
I'm doing all right, Perry.
Good. Well, listen, I got a couple of questions for you. If I'm a buyer, what opportunities are available for me right now in the marketplace?
I'd say really the biggest opportunity right now is something we've never seen before, is the lowest interest rates in the history of doing mortgages. So it's just an amazing time to buy a house, lock into a low interest rate. Um, and I would say that's the single most biggest opportunity out there right now.
It's really busy out there, I can tell you, and you know that as well because of the volume of mortgages that you're handling. How about your opinion of what's this do for sellers? What's the market need me there?
So for sellers right now, houses are selling rapidly. Homes are selling, they're increasing in value. That's another major benefit to being a buyer. Homes have been steadily increasing. When you're a seller, it's in most cases with a nice home, you're getting multiple offers. Homes are selling very quick. They're selling for higher prices than they've ever sold for. So, and the low rates are really driving that.
How do you feel about the appraisals for the sellers in this market? Because we're seeing numbers that are crazy, and the appraisers have to keep up with that.
So definitely appraisals, when you go to buy a house, that's forward looking. Appraisers look backwards. So they're always looking at the homes that sold prior to the purchase. And it is a little bit more challenging for an appraiser to justify these values because they are increasing so quickly. For the most part, we haven't seen a lot of issues with that, but that's definitely a solid point, and definitely one of the challenges of this market.
That's for sure. And over the next 90 days, what do you see anything different happening, or are we just going to be continuing on the same path as we are now?
I would guess that we would continue on the same path that we are right now. Inventories are very low. So that is one of the things that's also driving sales prices, is inventories are low. There's a lot of buyers out there. There seems to be many more buyers than there are sellers. And we're still doing a lot of pre-qualifications, a lot of pre-approvals. There's still a lot of buyers out there searching. So I do think that we'll have a strong fall. Normally, when you get into the fall, things tend to slow a little bit, and then the spring market is the market that picks up. But at the moment, there doesn't seem to be any slowdown this fall as we enter this fall.
I don't think we're going to see any real slowdown running between Thanksgiving and Christmas and New Year's like we normally do. It'll be whatever's out there will be fair game for buyers that are still left, because you've got 3 or 4 buyers who are losing on a property, and then they are still competing against the new buyers coming into the market. So I just agree that it's going to continue on.
Yep, definitely.
And the other side of this is with COVID and people losing their jobs and not being able to pay their mortgages. Do you see any issues with foreclosures, or are there going to be forbearances available? What do you think about that aspect of the market?
At the moment, the Fed has done an amazing job to step in and to provide stimulus so that we don't see that. It's really unprecedented what the Fed has done so far this year. Fannie Mae and Freddie Mac have offered products where they've asked servicers to allow people to go 3 months without making mortgage payments, without an impact to their credit score. So I feel that the actions that both Fannie, Freddie, and the Fed has taken have really put a backstop to what we would have normally saw in a time like this with foreclosures. So it definitely does not feel like there are foreclosures coming. And then I would say also on that topic with stimulus and what the government has done and what Fed has done is that there are a lot of people that have more money in their pockets right now. It's kind of hard to believe that with this time that we're going through, but savings rates are up. People have more money, and I feel like that's going to continue to drive the market.
Good. And lastly, I mean, we're in an election year, and that's always, I've always seen that to change the situation. You've noticed that there's changes during election years, but we're looking at the next 5 months to 12 months. I think from what I've heard, we're still going to be hanging in there with low rates.
I would agree with that. I think that Wall Street really tries to pay a lot of attention to the election to figure out who's going to be our next president, and I feel that Wall Street has felt pretty good about that, and whichever way that is to go. And I feel that the market has thought about that and is absorbed or is absorbing the different ways that that could go. And at the moment, I wouldn't expect any outcome of the election to have much impact on interest rates one way or another.
So we're going to be busy for the next year.
I think so.
All right. Well, thanks. It was really good talking to you. And if anybody needs help with their mortgage information, they can reach Tom at 215-836-0900 at Marathon Mortgage Services. So thanks so much. And we'll be talking on our next recording. Bye-bye.
Okay. Thanks, Barry. Have a good night.